Good morning and thanks everyone for joining this Saturday morning for a webinar on luxury consumption. And this webinar is part of our product True Blue. So, so globally, if you see in terms of consumption, so various categories are the like mass consumption, and then there is mass premium, then premium, and then luxury. So from a Indian investment landscape, I think most of our focus or most of the time, what we spend in terms of analyzing investment opportunities are morely tilted towards mass premium segments because in terms of listed universe, the stocks are mostly the opportunities set is mostly tilted toward this kind of categories. So we research mostly on the fast-moving consumer goods like consumer staples, or even on the automobile side. Also, I think mostly the product categories that are majorly present in India is tilted towards mass premium. And even if you take consumer durables also, I think it's tilted towards mass premium. And only in the last couple of years, we have seen that the premiumization trend has been visible across all these consumption categories. So from that viewpoint, I think, but next decade or so, we might see a good set of opportunities emerging from the luxury consumption side. So within India also, I think most of you would have been reading that. So as the economy grows and more people from the bottom of the pyramid graduates upwards of middle class. So currently, who have been the middle class will be graduating on the upper side towards the top of the pyramid in terms of income. So as they graduate and the top of the pyramid widens, I think most of their spending will be more moving towards luxury or discretionary spending, and the rate of spending towards luxury will be in terms of non-linear. So in that view, we just thought of exploring this consumption space, and so first, we'll start off with the luxury market in terms of what's the current size globally, and what are the different segments that's present in the within the luxury segment. And in the second part, we will discuss more on the business model. So, so in analyzing the luxury consumption sector, the key drivers could be completely different from what being analyzed for a consumer staples or a traditional automobile segment. Because here we will see as we go through the presentation that the factors which is driving the sales or demand will be completely different from that of the consumer staples. So that will be the second part, and we will end the webinar with discussing about a company which is the largest in the globally in terms of luxury consumption. So that's three parts that we will discuss over the next 30 to 40 minutes, and then we will have the Q&A at the end. So getting into the topic. So luxury, if you want to define luxury, I think this is one quote which defines it in a very lucid way that luxury is something that begins when the where the necessity ends. And so if you look at bulk of our population, like let's take the 85-90% of the population are still in the kind of income pyramid where they are mostly focusing on spending towards necessity. So necessity here means that even purchase of a passenger vehicle or four-wheeler uh, could be a necessity for a person who is in a white collar job. So once those person graduate upwards, then where the luxury consumption begins. So if you want to look at the opportunity size or any product segment that has to qualify for being a luxury, so this is where the quote stands. And so we have to distinguish between the premium and luxury. So there is mass segment, and then there comes a premium segment. So premium is something where a person pays more for a product, and he gets a more utility out of that product. So utility can be in terms of quality. So if someone purchases, let's say, a chimney for a kitchen use, so he can purchase a mass segment chimney. But if he goes for a premium segment, it gets a much more utility in terms of designing, in terms of lot of more features. So the chimney can have a lot of automated features, things like that. So premium is some product where we pay more and we also get more utility out of that. But at the same time, if you look at luxury, so luxury is something, so definitely we'll be paying more than the premium product. But here we won't be focusing on the utility side. So let's say another comparison could be that of a car. So a premium car in terms of, let's say, a BMW. So and there is a luxury car like Ferrari. So if you compare both in terms of features and utility productivity, I think both of them will have most of the same features in terms of ADAS or something like that. But if you look in terms of what the additional thing that Ferrari brings it out is that uh, in terms of the heritage, in the social distinction, being stand out apart from the crowd. So for the factors only, I think consumers prefer to buy a luxury product. So these are the clear distinction between premium and luxury. Moving to the next slide. Uh, so globally, what's the current market size is that it's close to around euro 1.5 trillion dollars. Uh, so and if you look at last 5-10 years, I think the growth rate has been around 8 to 10% last year, and if you take a decade, it's be around 6% growth rate. So it's a large market globally, and the growth rate has been like 2x that of the global GDP growth rate. So it's very attractive consumption segment that's been growing 2x of global GDP growth rate. And if you look at last 2-3 years, growth rates could be quite high. That's because coming out of COVID, I think we saw this segment outgrowing the others segment, because most of the people in this kind of consumption category, they didn't have the opportunities to spend in terms of going out or travel. So those kind of cash flows got shifted to this spending. So that's why you're seeing last couple of years this category growth rate was quite high, but going forward, we can expect this category will be growing in high single digits. So that will be the expectation in terms of growth rate. So within the market, luxury market, if you see that we can split the entire market into 9 major segments. We will look at what's the individual segments and their size. But two major segments that we have to watch out for is that luxury cars and personal luxury goods. So out of that 1.5 trillion market, so in terms of value, luxury cars is close to around 640 billion euros, and followed by personal luxury goods. So these are two major segments within the luxury market, and yeah. Uh, so these are the 9 major segments. Apart from the top two, so we'll be having a lot of segments like hospitality, which includes travel, luxury travel, etc. And then we'll have in terms of F&B, like spirits, alcoholic beverages, and then food and dining, and then household furnitures and fine art. So these are a lot of other segments involved. And if you want to break up each of these segments in terms of region wise, so there is some interesting data points that you can see that if you look at the spending towards fine art, private jet or cruises, mostly this is done by yeah, people who are residing in Europe or USA. But the billionaires or the HNIs in India or China, for example, I think most of their luxury spending is targeted towards personal luxury goods and luxury cars. Uh, so that's the broad market size, and what are the different segments that goes into that. And as we saw on the slide, I think just top three in terms of segments, cars and personal luxury goods and luxury travel forms around 80% of the total luxury market of 1.5 trillion euros. And if you look at the companies that are operating in this market, so the top company or the biggest in terms of revenue is Louis Vuitton Moet Tennessee. It's based out of France, and currently the market cap is around 360 billion euros. And last year's revenue, if you look at the company, has done a revenue close to around 85 billion euros. And so this is not a small size, right? I think out of the 1.5 trillion market, I think LVMH has taken a bulk of its share, and it's being listed also. And apart from LVMH, so we will look at in detail about the business model of LVMH in the later part of the presentation. There are other companies which are well known, like Hermes, which is known for its bikini handbags, and then there is Richmond. So these are top some 5-10 companies where globally it's been operating. And then from the automotive space, we have Ferrari. Uh, that's the only thing that's from the automotive space. Others are mostly towards tilted towards personal luxury goods in terms of it can be either a leather goods or a beauty segments. That's where the companies operate mostly. So if you ask whether the this segment has created value to the shareholders, I think if we go through the Bloomberg billionaires data, right? So if you look at top 10 billionaires globally, most of the billionaires have come from the technology background. So only one of the billionaire who is Bernard Arnault, so who is the founder and promoter of the LVMH. He's the only billionaire in the top 10 who is coming from a background of consumption side. And that's where the luxury segment comes in. So it shows that luxury business as such has been a huge wealth creator over the last couple of decades. Yeah. So luxury, we have seen that luxury has been a wealth creator, and if you want to see that whether the luxury as a segment will be wealth creating going forward also, I think you have to see that whether the segment has a moat in terms of going at a high single digit and then having a quite a high double digit kind of ROE levels. So for that, we have gone through what are the key factors that enable these companies to create value over the last decades or so. So if you look at LVMH, so LVMH houses close to around 75 brands, and they categorize it as in 6 different categories. So most of these brands have been in existence for quite a lot of. It's been more than 100 years, 200 years kind of brand existence. So any person who is looking to spend on the luxury side will be looking for a brand which has a quite a heritage, which has a quite a history behind that. So these are something which can be created by a technology company or any consumption company by starting like a by starting now, and then over the next 5-10 years, if we even if the company spends quite $1 billion in terms of advertising spend and everything, I think it's quite difficult to garner the minds share of the customers in terms of taking the same kind of heritage and things like that. Even if the company, if a new company comes in and brings out a product which is of similar quality and craftsmanship, but the heritage level and the history that these brands carry can't be imitated. So we see that these companies have a moat in terms of brands, and replicating those brands is going to be impossible. Warren Buffett used to say that for the Coca-Cola, right? I think even if a new company comes in and spends in billions of dollars, I think taking the same, bringing the same kind of brand awareness like Coke is uh, can't say impossible, but there is a low probability. Uh, so that's where we see that these companies have a good lot of moat in terms of heritage, in terms of desirability towards the brands, and of course, I think the companies back it up with maintaining the highest quality in terms of product quality. So we have seen what's the market size, and what are the companies that are operating, and how they have created the wealth in terms of key factors. So we will deep dive into the business model of the luxury business. So business model wise, if you take the consumption business in India, so most of them are a consumer staples company like HUL, or a automobile side, whether it may be a Maruti or M&M. When we are analyzing these companies, what are the key factors that we look at it is that how is the demand scenario, and this demand scenario is driven by mostly the inflation. How is the monsoon play? Because monsoon plays a huge factor in terms of farmers' income. That will in turn drive the demand for the consumer goods like FMCG company like HUL or Nestle. But when we have to look at the demand factors for the luxury, it will be completely different, because here the price elasticity, there won't be any such thing as price elasticity. So as the traditionally, if you look at any FMCG company, they might say that as they increase the price, right, the demand slows down. But in luxury, it's quite opposite. So we will look at that. So from that angle, we will analyze uh, what are the key factors or key drivers that these companies running in. So first and foremost, and the most important factor is the desirability. So these brands or companies, they just focus on creating a desirability for that brand. So any luxury consumption customer or a person who is looking to spend will be driven by the desirability of the brand. And this is one comment from the CFO of the LVMH. So where he's saying that their focus is completely to improve the desirability of the brand year over year. And if they focus on the desirability of the brand, they can just increase the price year over year, and the demand just not even just slows down, but the demand increases with the increase in price. So that's where the key distinction comes in. So we look at the next graph, right? So for a traditional spend, I think this graph would be an invert, because as price increases, the quantity will be declining. But for a luxury product, as they increase the price, right, I think the desirability for the consumer segment increases, because uh, so those who are spending towards this product, I think they get a sense of exclusiveness. Because get a sense of being a part of a tribe. Only those kind of people can own those kind of products. So as the price of the product increases, the desirability also increases, and demand also increases. So this is an interesting phenomenon uh, versus the traditional economics 101, where the as we increase the price, the demand slows down. This is one important factor that we have to see when analyzing any luxury consumption company. And so what drives this, right? As they increase the price, demand also increases, because that shows that these brands has pricing power. This is another comment from the CFO in the LVMH con call. So in the conference call, he says that the pricing power is directly a function of the desirability of the brand. So any brand which qualifies being desirable uh, just increases prices year over year, and they just improve the sales in terms of sales and also maintaining the profits. But all brands can't do this, and we will look at what are the key factors that goes into creating a brand that is desirable. As we see in the first part, the key factors could be like having a good heritage and yeah, a brief history of the brand. And those persons who are looking to buy this brand, they get a sense that we are owning a piece of history. So that's what creates a desirable brand. And again, this is from another luxury company, Richmond, where they are saying is that their only main focus is that strong desirability. So once you get the strong desirability, you get to the pricing power. You get the If you get the pricing power, then you get the margins, and if you get the margins, directly it goes to the profitability and the ROEs. So this is where the entire how the business model of the luxury companies work. And you might have a question that since as they increase the prices, the demand also increases, and whether these companies increases supply. So these companies doesn't increase the supply because they tend to slow down the supply and create a scarcity in the market, such that the desirability or the pricing power remains the same. So if you compare the uh, margins of Ferrari versus Benz or Porsche, there's a huge difference. So Ferrari does a gross margin of close to around 50%, which is unheard in the automobile market. And then if you look at even those companies which qualify as to be a premium in the automotive segment like Benz or Porsche, I think they does margins in the range of 20%. So what gives Ferrari this kind of margins is that the pricing power and the desirability of the brand. So and Ferrari keeps a very keen eye towards the supply. So they limits the supply and then creates a scarcity in the market so that they get to the kind of pricing the product, and then at the end of the day they make the margins close to around 50%. That's the highest in the automotive industry. And yeah, this is one snippet from the quarterly call of LVMH by the founder CEO Bernard Arnault. So where he is saying that the fundamental goal of the luxury company is maintaining the desirability of the brand. So he's saying that over the next decade or the next 5 years, 10 years time period, so they want to maintain Louis Vuitton as the most desirable brand. So it's not that they want to make the Louis Vuitton as the number one brand in terms of sales or in terms of scale. So maintaining the brand status, the perception, the image. So that's where the clear focus, and most of the marketing actions, either on the A&P spends, and a lot of thing goes. The strategy goes into meeting the brand status, and when we are analyzing a, luxury product, I think we have to focus whether the company is taking steps or the actions taken by the company is in terms of aligning with this business model. Okay. So as we gone through the pricing power, the next one comes the growth. Except for the COVID year in 2020 and during the last recession in 2008-9, and the luxury segment has been category consumption category which has been growing in terms of 5 to 6% kind of rate. And so he might think that since all these brands have a good lot of demand, why can't the company can grow at high double digits and make the most of the sales in this? And if you look at why they are not doing it, we will come to the reason. And this is a region-wise growth rates. And last couple of decades, the entire luxury market has been driven by Asia Pacific. That's predominantly by China. So, if you look at in terms of overall market share, also currently Asia Pacific has close to around 37% kind of market share. That's because predominantly from the Chinese spending. So the three key markets are Europe, USA, and China. And so Asia Pacific has been the outgrowing the other two markets. And these are one of the most important slides, I could say, because as we see in the growth, right, I think the market has been growing at around high single digits. And we have seen that the companies are deliberately slowing down the supply. So this is a comment from the founder CEO of LVMH in their last Q4 2023 call. So where usually as a financial analyst or an investor, right, we might be looking for companies to grow at a higher rate in terms of top line sales and then maintain the margin, and also we expect their margins also to improve. But here the founder is saying that each level of the management level, I think they are focusing on slowing down the uh, sales towards a particular brand. That's because the companies have a lot of brands which are very much successful, and the usual temptation that comes for a management with a successful product is that to scale up the product, to increase the production, to increase the uh, uh, manufacturing capacity so that they can max out the profits what are the investments that they have done. But here what the clear strategy of the LVMH is that it rather slow down the push. So main reason is that they want to maintain the desirability of the brand, and then they want to make it more kind of a include like exclusive to a particular segment so that the brand's uh, image and heritage remains the same. We have looked at what are the key drivers towards the business model. Now we look at a couple of interesting trends within the luxury market. So one interesting trend that we have to watch out is that demographic cohort. So the spending varies between the generations. So between Gen X, Gen Y, Gen Z, the spending towards luxury, towards what kind of segments also differs. Because if you look at Gen X or some Gen Y, then most of the segments would be luxury spending would be towards personal luxury goods or luxury cars. But the upcoming next generation, I think their focus is more towards experience, more towards luxury travel. So by analyzing this data, I think we can get a sense that over the next 5, 10 years, among the luxury segments, the luxury hospitality might outgrow the other segment in terms of growth. As Gen Z population by like 2030, I think they will be accounting for close to 30% of the luxury market, and the millennials will be accounting for close to 50%. So with 80% of the luxury market coming from these two cohorts of population, we might see luxury hospitality as a market which is outgrowing the others, while luxury personal goods and cars might see a growth rate in line with the overall industry. And yeah, so as we saw in the last slide, um, luxury hospitality market currently it's close to around euro 200 billion uh, uh, in terms of size. And only in the post-COVID, we have seen a steep slump in terms of travel and hospitality, and we are expecting that this year they will be coming back. And within the regions, I think China is yet to come back to the pre-pandemic level. That's why the demand scenario is still yet to reach the previous peak. So on the next slide, I think here we look at in terms of region wise, as you can see here that mainland China, if you take it growth rate in terms of the last decade from 2010 to 23, mainland China in terms of luxury market has grown in terms of high double digits in terms of 15%, 15 to 17%, and but this growth rate might taper down a bit from here on. I think since their luxury market could have bit out saturated, and they are going undergoing economic changes over there in the country. But we can expect the rest of the world, uh, led by India, over the next decade or so, to see a higher growth rate. So one more trends that we found out was that distribution. So if you look at any luxury distribution, they are categorized mainly two types. One is that mono brand, where a single brand led our retail outlet. So this single brand or a mono brand re- retail outlet has been gaining share in terms of volume, in terms of value. And again, online, as we have seen in other consumption categories, online too is been gaining market share, while the multi-brand outlet or a department store led kind of retail outlets have been slowing down, or they have been losing market because the luxury companies themselves are more inclined towards having a single brand outlet, because thereby they'll be gaining the entire data of the consumers and what the consumers they prefer, so that they can take the data back and then create products which are very very relevant, and then they can price the product according to the demand. So in terms of distribution, we can expect the single brand retail outlet to gain market share more and more as we go about. So in terms of uh, mostly we have covered the entire market landscape, and then mostly towards the business model and everything. So just to understand a bit more about the market, I think we will look at uh, the leading company within this space, and that's LVMH. So if you look at the LVMH in terms of their brands, they own close to around 75 brands, and they are present in almost of 80 countries. And uh, their last annual sales in terms of close to around 85 billion euros. And from the operating profit, right, this was the most important, interesting aspect. They does close to around 27% kind of operating profit margin. Yeah. So within LVMH, so in order to understand what kind of margins that these companies operate, if you look at the segment of leather goods and fashion and leather goods, where LVMH owns brands like Dior and Louis Vuitton, etc. So operating margin is close to around 40%. So uh, this company is able to generate operating margin because that's purely led by the pricing power. In turn, the pricing power is driven by the desirability and the heritage and the history of the brand. So those are the key drivers. That's from the background or the foundation for the company to generate operating margin of close to 40%. Yeah, and so if you look at the last 7 8 years kind of margin levels, I think they are able to maintain stable set of margins. So it's not that very volatile or very fluctuating one. So it shows that the stability in terms of business. And so LVMH is, they house brands which has a heritage of more than 100 years or 200 years, but as a company as such, in its current form, has been built only in the last 3 decades. So the founder or the CEO, I think he acquired first the Christian Dior brand in 1980s, and then he started acquiring a lot of luxury brands, and then he has built a house of brands. That's where the economies of scale kicked in. So all these luxury brands will have as manufacturing, sales, and distribution as marketing as a common one. So thereby They have brought down the entire overhead cost down. With that, they are able to leverage the entire operating leverage and gain scale. And that's why any single luxury brand or a single luxury brand company won't be operating at the same level of margins as that of LVMH, because here almost 70 plus brands operate with a, in terms of same unique platform, and then all this cost benefits accrue to the all the brands. And for example, the last acquisition of LVMH was Tiffany, which is a US based luxury jewelry brand. So before acquisition, if you look at the profit levels, and now I think it has almost doubled. So any that's where the house of brands and economies of scale kind of business model came in for LVMH. And so, in terms of how the company is able to grow and maintain the margins over the economic cycle, is that during any economic downturns, I think the balance sheet strength comes in, and then they're able to utilize the economic downturns. So it's quite counter-cyclical. Now, any during the economic crisis, I think they have a good balance sheet to leverage and then acquire brands, and then gain strength over the time period. So, yeah, almost all the luxury goods companies, I think they operate out of a counter-cyclical kind of business model versus the traditional consumption categories like automotive or consumer staples, whose growth gets tend to get affected because of economic downturns. And we'll just end the presentation with the outlook on the market. And so you need to understand a effect called Lindy effect. So Lindy effect generally states that longer a period a brand has survived or exist, I think it could present or exist over a next longer period of time. So if Lindy effect is true, right, I think most of the luxury brand have been in existence for centuries, and they tend to exist for the next century. So with that, in terms of growth rate, from the current market size of close to around 1.5 trillion euros, I think luxury market could grow around 4 to 8%, and within them, so as of now, China is yet to regain to their pre-COVID levels, and so as in when China also recovers, right, I think we should see growth return to the overall market. These are broadly references which has been taken to that, and then so uh, this is so we end our presentation with the product description. So this webinar is part of our True Blue product, and so if you are doing most of the webinars, you may come to know about our investment philosophy in terms of long-term focus and bottom-up approach, everything. And so True Blue will be kind of a large cap concentrated portfolio, and we can get in touch with our RMs if you want to know more about the product. And that's broadly this webinar. And if you have any Q&As, I think we can start our Q&A session. You can also post it in our chat box or Q&A box. If you have any questions? So you have the first question from Kirti. How much of ESG risk and ESG landscape affect the performance of the luxury brands? Yes, I think almost all the luxury brands are very much conscious in terms of having those kind of risk metrics factored into their business model, because the kind of consumer that they target, I think most of them are very well aware of this. Even not only luxury companies, we are finding it that most of the FMCG consumer staple companies and uh, even the automotive companies who are present in the mass and mass premium, I think they are more and more tilted towards environmental awareness and even the regulations. I think the regulations, if you see that, as we see for even a mass passenger vehicle, I think we have gone from BS4, BS6, and then going towards electric. I think as far as products is concerned, I think they will be more and more moving towards environmentally sustainable. As far as that's environmental, and as far as social and governance, I think those factors are already very well built in towards in the current platform. So don't see much of the risk in terms of ESG coming for this segment. Uh, they might have to do a lot of work in terms of coming out with materials which are environmental friendly. If they're using more of traditional leather, they might move towards other alternative materials. So those are things we can watch out for. Yeah. So that's as far as ESG is concerned. And are we seeing any corporate in India showing signs of developing luxury and any other brands in India? So in India, uh, since bulk of our consumption happens towards mass premium, most of the companies are focusing on those segments still, because still those segments has a lot of potential, because as our income and population moves upwards from low income to the middle income category. So even this mass premium as a category could be a huge opportunity size. But there are certain corporates where we can play the luxury theme. For example, it can be a distributor of or a dealer of a luxury automotive company. So in that ways we can play this theme by being in India. So we can look at who are the suppliers to these companies, who are the dealers or of these companies. So by looking from the supply chain, we can play this theme in India. Uh, so another question: where do India stand in region-wise market split? So it's an interesting question, because India currently the luxury market is very low in terms of. So if you take a quantum, it will be around 8-10 billion dollars versus the entire market size of close to around 1.8 trillion dollars. So our size in terms of globally, I think it's quite low. But if you look at next decade, I think the growth rate in India will be quite high, because currently, uh, let's say if you are, currently there is 200 billionaires currently in India now, and we have a HNI population or a ultra HNI population that will be close to around a million now. But as this population cohort increases over the next 7-10 years, so the HNI population is expected to increase towards 1.5, 1.7 million. The entire consumption of them is going to be non-linear towards luxury. So in that way, Indian market growth rate is expected to be much higher as more and more people get into the HNI category, and then they are spending towards luxury. So that's where India stands in terms of region. And recently, there is another question. Recently, I read a report of M&A activities uh, booming and interesting M&A that is taking place. Yes, if you look at the luxury currently the top companies in the luxury space, right? For example, LVMH. So LVMH currently it has been built over the last 3 decades by acquiring a series of brands. So, for example, they started out with a single brand called Christian Dior. So, from Dior, they even the LVMH, the Louis Vuitton Moet Hennessy was a company which was acquired by Christian Dior's parent company. And then over the last 2 decades, they have been looking to acquire companies like Hermes and then Gucci, but they have been failed in acquiring both these companies. Uh, I think event activities will be there, and especially because, as I mentioned, having a house of brands gives them a scale advantage in terms of having a same manufacturing setup, procurement, craftsmanship, and especially talent. So a talent, for example, a person who is working for a single brand led company, I think his opportunity to move up the ladder is quite limited in a single brand company. For example, he is working in a company which has multiple brands. Obviously, I think he can move up easily, and the promoters or the founders of the brand can move the talents across brands. Thereby, they won't lose any talent. So that gives them because in this industry, I think the talent is the craftsmanship or talent that's I think the most important factor after the brand and their heritage, things like that. Uh, of course, we can expect more and more of M&A happening this place. And the last one that interesting was that the LVMH acquisition of Tiffany. So if you read that, I think then the kind of operating leverage that the Tiffany got by being into the fold of LVMH was quite a lot, and so that was one interesting thing. Any other questions? There's another question. Is there a significant debt risk in these luxury companies? It's an interesting question. So, if you want to analyze the debt risk of any company, right? I think you have to look at the business model, and the business model and the strength of the company. So, in terms of the company's capacity to take debt. So as we discussed in the webinar, right, these companies, uh, 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 in terms of they don't see a much more volatility in terms of margins or sales. So the volatility in terms of financial metrics are quite low. So as the volatility in business metrics is low, I think their ability to take debt goes up. And as these companies have a scale, so they operate globally. So that also adds to their advantage in terms of taking debt. So uh, wherever they operate, I think if they're a acquiring company, they can leverage their balance sheet with their local entity. They get favorable debt metrics. So I find that debt could not be a major risk since their ability to take uh, debt is quite higher versus the cyclical companies. So that's why being a non-cyclical and counter-cyclical business model gives them a higher ability to have a debt. And that's where most of the M&A also happens. So why most of the M&A they are able to successfully make is that the ability of the companies or the balance sheet gives them the flexibility to take debt and acquire companies, and then get the scale benefits and once again reap the profitability. And so next question is on the valuation side. So it's a very interesting point. I think from the valuation side, these companies make optimum level of margins, which are quite lucrative. If you look at any other consumption areas, and even on the growth rates, right? I think the growth rates are quite in line with what we are seeing the consumption companies in India is growing. So if you look at growth rates, they're very conservative in terms of we can expect 6-7% growth rate unless if they do an M&A and then push up the inorganic growth. So organic growth will be around 6-7% kind of organic growth, and margins will be quite stable. So from that way, the valuations can be drawn down. Either you can do a DCF or a price to sales multiple towards the entire sector. I think currently there is some valuation can see a distinct differentiation between the companies itself. For example, if you look at LVMH valuation versus Hermes, I think there will be a steep difference. That's because that is also a bit of brand power or brand image comes in, and then it distorts the valuation. So Hermes with their Birkin bag, and then their focus on the handbag as a leather goods as a segment. I think so. If a company is focusing on high growth segment, so traditionally they tend to get a better value than the other companies. But being stable 6-7% growth companies, I think current valuations you can take, and then you can do a DCF thing and come out with a good multiple. And next question is most of the luxury segment take the route of alternatives like private credit or private debt. How much of transparency is available to me? Uh, so globally, all these companies are listed, and usually large companies, I'm saying, and these companies have good set of disclosure levels. So they do their quarterly conference calls, and then AGMs, and even for us by sitting in India, I think we get to know and analyze a lot of things about the business. So transparency levels in terms of data analyzing the company, I think it's much more in, I would say, it's in line with other technology companies. Uh, so there is no breadth of uh, data availability to analyze the business. Maybe some unlisted companies might be taking the private credit, and so for most of the broadly top major companies in terms of size were generally listed. So if you have any questions, you can just drop it here. And broadly, what I could suggest is that this webinar could be like a starting point in terms of getting to know about the sector and things like that. So from this, I think on the you could have known about the business drivers and things like that. You could take it forward and then analyze what are the companies that are listed in India or servicing these kind of companies. So that way to help you in analyzing these segment further. So that's broadly your suggestion. So if there are no questions, I think we can close the webinar. And thanks everyone for joining us today for this presentation. Yeah, yeah, please tell me. Okay, please drop it. I think we will answer them in the YouTube channel. Okay. Thanks everyone again for joining us. We'll close the presentation today. Good day. Bye.